So we're really going to be switching gears in chapter 18, 19, and 20 because we're switching our focus away from financial accounting, and we're going to end the term with managerial accounting. So in your reading, and your reading is so important in chapter 18 because there's a lot of conceptual stuff in chapter 18 that you need to know, and like one big calculation. So make sure you do your reading and your summaries and be able to tell the difference between financial and managerial accounting, and also be able to understand the management process in your reading. I'm going to start off talking about some new terminology because in managerial accounting, we're really not focused on banks and investors as our users, but managers are the users of all of the information that we come up with in managerial accounting. And so managers are internal employees, and they're looking at the details and the costs of what's going into manufacturing a product. So we're talking about a company, when we're talking about managerial accounting, we're talking about a company that makes its products. And that's going to be really important. We're not buying these things and selling them like Target would or Walmart. We're actually building the product like Hyundai is building its cars and then selling them. And so we're going to want to understand how costs work so that we can build, the information that we need. And a cost is going to be the amount we pay for an item. So some of these items that we buy are going to be direct and traceable. Like if I'm going to probably use guitars a lot today in my examples because there's wood that goes into an acoustic guitar. And that's pretty significant and traceable. So we consider that a direct cost. But there are also indirect costs that we need to build a guitar, like glue, but they're not really traceable. Like you can't trace which bottle of glue we used for which guitar. So, and those are insignificant components of our product, and so they're indirect. So there's going to be two different types of cost there. And then we're going to be talking about cost objects, which could be a product, like the guitar, or a department, or an activity, or like a location. So we could be talking about costs in different contexts. Here's kind of a breakdown of my guitar example. So we have different types of costs. They'd be direct or indirect. But then we can further break those down into types. So we have 3 different types of manufacturing costs. We're going to have direct material, which I like to abbreviate as DM, direct material, or direct labor, which I like to abbreviate as DL, factory overhead, which I like to abbreviate as FOH. So those are the 3 types of manufacturing costs. So I gave you the example of a direct cost would be wood for a guitar. Well, that's a material cost, so it's direct. Material of glue is indirect material. Direct labor would be the person actually building the guitar. He's got his hands on the guitar. He's putting the pieces together, maybe stringing it and testing it. The supervisor who's walking around the shop, or the janitor who cleans up and empties the trash, those are important jobs that go into building this guitar, but they're not direct costs. They're going to be indirect costs, indirect labor associated with this guitar. And then there's no such thing as a direct overhead. Anything that is overhead other than material and labor is necessary to build a guitar, but we can't really tie it directly. Like our utilities that we pay for our warehouse, property taxes, repairs on any equipment that builds the guitar, and depreciation on the factory or the warehouse. Those are going to be indirect costs. And one other terminology section that I want you to know is what prime costs are. So if I say, what are the prime costs of this guitar? Well, you would add up the direct material and the direct labor costs of the guitar. And then conversion costs, if I said, what are the conversion costs of the guitar? You would add up the direct labor and the factory overhead and give me that amount. So you need to know what's included in prime cost, what's included in conversion costs. Okay, another distinguishment with costs are period cost versus product cost. So I just gave you an example of manufacturing costs, which are all product costs. So all manufacturing costs are product costs. So direct material, direct labor, and factory overhead. Now, there are other costs. So we're going to have salespeople, accountants. We're going to have a sales building, sales equipment. We'll have utilities on the sales office. Those are all going to be period costs, and we're going to immediately expense those on the income statement. For product costs, which include manufacturing costs I just showed you, we're not going to expense those right away. We're going to put them into inventory, which is on the balance sheet, and we're going to keep them there until they are sold. Once they are sold, we will move only sold costs, which are called costs of goods sold, to the income statement. So you need to be able to identify the difference between a product cost and a period cost. And then we will be calculating in this chapter cost of goods sold. Okay? So cost of goods sold calculation is 4 steps. And you may not need to calculate all 4 steps in every problem I give you. Sometimes you'll start here and you'll have to do all 4 steps to get cost of goods sold. Or sometimes I'll start you, maybe I'll start you here, and then you'll just have to do the last 2 steps to get cost of goods sold. So you just need to know the 4 steps and then how to figure out where you are in the process when I ask questions. So here is the 4 steps. You first need to calculate cost of materials used. So this is your direct material. Then you need to calculate total manufacturing costs, and then total goods cost of goods manufactured, and then cost of goods sold. So here is step 1 and an example. And you'll see a theme here in how these calculations work. You're going to start off with beginning materials inventory. So we're just looking at materials here, not finished inventory, just the materials, like a pile of wood. And we're going to add any material we purchased, and those two together are materials available to use. And then if we subtract out what is in our ending material inventory, we basically back into the cost of material used. So that's the answer that we want from step 1. Here's an example. Let's say we purchased $828,000 of materials. Our inventory at the beginning of June was $279, and our inventory at the end of June was $252. So all we do is plug these into the formula. So beginning inventory was $279. Materials purchased, $828. We're going to add them together. So we have $1,107,000 available to use in materials this period in June. At the end of June, we had $252,000 left. So that means we used, backing into it, $855. So that's the answer. So you will use the answer in each step in the next step. So we'll use the $855 in step 2. Here are all the steps together. So step 1 I just showed you, cost materials used. We're going to plug that number into the second calculation. as the first number. So we need direct materials used, then we're going to add direct labor and add factory overhead to get our total manufacturing costs incurred. Then we take that number and we add it to the beginning of our work in process. So there's three different types of inventory. There's materials inventory, there's work in process inventory, so that's inventory that we've started but we've not finished yet. And then there's finished goods. So we're going to go all the way through each type of inventory to end up with cost of goods sold at the end. So we did direct materials, and now we're in work in process. So we're going to start off with work in process inventory in step 3, add answer from step 2, total manufacturing cost, to get total manufacturing costs. And then we're going to subtract ending work in process to get cost of goods manufactured. That's the answer to step 3. Once you get that answer, you add it into step 4. So starting off now with beginning finished goods, adding answer from step 3 to get total goods available to sell. And then if you subtract the ending finished goods, that gives us cost of goods sold. So it's 4 steps. Once we have cost of goods sold, that's the number that we put on our income statement. We subtract it from sales to get our gross profit. So I know you've seen gross profit before, and that's how we get cost of goods sold. So let's do a couple of examples. So here's some information. We have cost of direct materials used, direct labor, factory overhead. We have beginning and ending work in process, beginning and ending finished goods. So it looks to me like we've been given step 1, cost of direct materials used. So that's your answer to step 1. You've already been given step 1. You don't have to calculate it. So let's move on to step 2, total manufacturing costs incurred, which is going to be these 3 together. So total manufacturing costs incurred is going to be $21,000 plus $54,200 plus $35,000. So that's $110,250. Then we're going to take this number and put it into step 3. So step 3 is going to involve the answer to step 2 and then our beginning and ending work in process. So step 3, we're going to say beginning with work in process, and we're going to add to it our total manufacturing costs incurred from up here. And that total is total manufacturing costs, and subtract ending with $92,750. So our answer to step 3 is cost of goods manufactured, and that is $105,000. All right, so step 4 includes these last 2 involving beginning and ending finished goods. So we're going to use the 105 in our step 4. So we'll start off with beginning finished goods, add to it our cost of goods manufactured, and this is our total goods available for sale. And we're going to subtract our ending finished goods of $42,000 to get cost of goods sold. Okay? So in this question, I could have said, what is the total manufacturing cost incurred? Well, then you would have just stopped at step 2. Or I could have asked you, what are the cost of goods manufactured? Then you could have stopped at step 3. Or what is cost of goods sold? Then you could have stopped at step 4. So you need to know what your totals are and what they mean in each step. Okay, let's do this one, this last one, and we could do it a little faster this time. So we've, once again, already been given step 1. So our step 2 is going to be the answers to totaling up direct materials used, direct labor, factory overhead. So that is $200,000. Okay? And we're going to add that $200,000 to beginning work in process, and we're going to subtract our ending work in process from that number. So you can just say 32.8 plus 200,000 minus the 29.6 is going to be your answer to step 3, cost of goods manufactured, which is 203,200. And then you're going to use that down here in step 4. You're going to add to it beginning, finished goods, and subtract ending. So you do that real quickly here. To get the answer to step 4, which is cost of goods sold. So once again, I could ask you a question regarding any of the totals in any of the steps. Okay, so I've put some practice on Canvas for you for Chapter 18, and it doesn't only include these calculations, but also all the conceptual stuff you should have been reading and the different types of costs in this chapter, like period cost versus product cost, or direct material versus direct labor versus factory overhead, or direct versus indirect costs, or prime costs versus conversion costs. So you need to know all that terminology before you do your homework. Okay, so go through all the practice and then try out the homework, and good luck.